Right. Uh, let's start with today's session. Good evening, everyone. So I think in last week we conducted up to question number 8. So today we have to start from question number 9. What's the question? The question is GDP deflator. So explain the concept of GDP deflator. I think it's easy, right? Because we know it's a price index. So it's a price index. So price index is what? A measurement that can measure the changes in price level. So here GDP deflator also a price index. So I think I have gave you the note. We'll read it first and I'll explain it later. GDP deflator is an index revealed by information of GDP. It also called implicit price index, right? It's called implicit price index. So GDP deflator or sorry, implicit price index. Sorry. When estimating domestic price in a particular year using current price and constant price, increase in current price depicts an incremental in the price level of the economy. What does it mean? When we have GDP at when estimating domestic product in a particular year using current price and constant price. So we have both GDP at current price and also GDP at constant price. Right. So here, what is the GDP deflator mean? It depicts, it mention or depicts mean that we can identify it by incremental of the price level, right? So here, when it comes to constant price become current price, there should be what here, right? Here constant price is only the real output change. That means only output change. But here in market price, there are two things: output change plus price level change, right? So here this price level change is the what we call, this can be identified through GDP deflator. It's easy, right? GDP deflator. How to calculate the GDP deflator? It can be calculated by, so we know we need both current price and constant price to calculate the price change. So here GDP at market price, current market price, right? Current market price divide by GDP at constant price, right? So it is the ratio. Actually, GDP deflator is the ratio between current market price and constant price. But since it is as an as index, right? It is as an index, no. So we have to multiply it by 100, because every indexes we have to multiply by 100. So here it is GDP deflator also is an index. Since it is an index, we have to multiply this by 100. So it is actually ratio between current price and constant price. That is the GDP deflator. So this price level change can be identified by GDP deflator. So that's it. We'll read the answer. Third point, GDP deflator is a measure used to measure the price level of all the final goods, right? Price level of all the final goods and service produced in the economy, right? So it can be identified, GDP deflator can be identified as the price index to calculate the price level, changes in price level in all the final goods and services in a country, right? So I think it's better to study second point or third point as the definition, right? It's better third point as the definition. And second point is this explanation. And lastly, fourth point, it is calculated as a ratio between the GDP at current price, and the value of GDP calculated at fixed price or constant price into 100, right? So when the price index is provided, GDP is available as follows. I think there are two formulas. So since there is only one box, you have to divide that single box into two parts, right? So one is this. Left part is, you have to write down this formula as well as what the fifth point says when the price index is provided. Price index එක දීලා තිබ්බොත්, GDP deflate එක දීලා තිබ්බොත්, we can calculate the GDP. එතන දාගන්න ඕනේ when the price index is provided, the GDP at constant price. Constant price කියලා එන්න ඕනේ. GDP at constant price is available as follows. So there should be two formulas. එකක් GDP deflator එකට, අනිත් එක GDP at constant price. GDP at constant price equal, right? ඒක හරි ලේසි ළමයි මේ බලන්න. GDP at constant price කියන්නේ මේක මෙහෙට ගියා. මේක මෙතනට ආවා. Cross multiplication. ඒගොල්ලෝ හදිස්සියවත් price index එක දීලා තිබ්බොත් ඕගොල්ලන්ගෙන් අහන්න පුළුවන් what is the constant price GDP? ලේසි. GDP at constant price equal මේක එහෙමමයි. මෙතන cross multiplication දැම්ම නම් ඉවරයි. GDP at current market price divide by GDP deflator. හැබැයි සමහර වෙලාවට GDP deflator කියන්නේ නැතුව they will use instead of GDP deflator this name, implicit price index. Implicit price index, right? They will measure GDP deflator. They will give you have to divide the current market price GDP by GDP deflator or implicit price index into 100. So this is it, right? Both formulas should be written down because the fifth point says this formula, right? This is the fifth point formula. Fourth point says this formula. කොහොමද යා කළා හරි එතනට දාගන්න මේක fourth point එක ගාවට මේක fifth point එක ගාවට මේක. Right, what's the next question? Next question is, right, an important thing of preparing national account is a country is to provide an indicator to measure the growth of the economy over a period of time. What does the economic growth rate mean? හරි ලේසිනේ ළමයි. මොකක්ද economic growth rate කියන්නේ? Economic growth rate එක කියන්නේ incremental of real output, right? ඒක තමයි economic growth rate එක කියන්නේ incremental of real output. ඒක චුට්ටක් අපි කැටයන් දාලා ගමු. සරලවම ගත්තොත් simply it called increment percentage of real output is what? Economic growth, not the GDP deflator. We have to erase the previous subtopic. Here it is question number 10. Economic growth rate. Growth rate නේ ළමයි අහන්නේ. Rate. Yes. Rate කියලා අහනවා. Economic growth විතරක් තිබ්බනම් මොකද ළමයි? If it was, what is the economic growth? So it's not the percentage, just economic growth කියලා තිබ්බනම් incremental of real output. Rate කියලා තියෙන නිසා percentage කියලා කැලලක් එනවා. හරිද? ඔයගොල්ලෝ මේක ලියාගත්තා නම් හොඳයි. ඕකේ තියෙන එක පොඩ්ඩක් complex. ඕකේ තියෙන definition එක, but it's the proper definition, right? So what's the definition in your tune? The economic growth rate is the percentage of change in GDP over the last 2 years at constant price. ඒක පොඩ්ඩක් හදාගන්න නේද ළමයි? ඒක පොඩ්ඩක් පැටලෙනවා. මෙහෙම දාගන්නකො. The economic growth rate is the percentage of මෙහෙම දාගන්නකො. මේකම අපි පොඩ්ඩක් හදාගමු. Increment percentage of real output with compared to last year real output. ඔන්න ඕක දාගන්න ළමයි. ඕකේ තියෙන එක කපන්න. ඕකේ තියෙන එක කපලා මේක දාගන්න. Because it's easy. If you write down this or this, whatever, you will get marks. I think this is easy to keep in mind. Increment percentage of real output with compared to last year real output. It's easy. So you have to calculate that. I think we calculated it previously, right? At last week, there was a sum I calculated. So just write down the formula at box. GDP growth rate equal GDP at constant price minus make it year 1 GDP year 1 or current year GDP at constant price minus year 0, that means year current year here last year. GDP at constant price divide by what? With compared to last year real output. Real output එකයි constant price එකයි දෙකම එකයි. So here with compared to last year real output. Year 0. This is the last year real output. Year 0 GDP at constant price into what? Into 100% growth rate percentage. So this is it. Right now What's next? Next point is the economic growth rate is calculated on the basis of fixed price. Economic growth rate එක යන්නේ fixed price එකෙන් නැත්නම් constant price එකෙන්. Because why? Since the current price includes the inflationary effect, right? Current price එකෙන් මේක ගන්න බෑ හේතුව ඇයි? It includes the inflationary effect of GDP. The value calculated under fixed prices is used to measure economic growth since it only consists with change in real output. There's no any inflationary effect. That's the meaning of this. Right, next question number 11. Explain how per capita income is calculated as a measure of living standard of the people of a country. There are so many of me, right? Anyway, as a measure of the living standard in a people of a country, right? So per capita GDP, what is it? Average GDP per person. That's easy. So we have to just divide the GDP by population. Right? 11 per capita GDP is equal GDP at, right? You can take it market price or constant price. It depends on the question, right? So per capita GDP, if they haven't mentioned it is real output or nominal output, you can take whatever, right? GDP at market price, that means current price, divide by population. In here, better one is mid-year population. If they have given, it's better to take mid-year population. Otherwise, just use the population if they have not given mid-year population. Right. So this is the first one. Write down this. I think there are 3 boxes. For the below part, there you have to write down. Right. From the below part, you can write down. Here, per capita GDP at market price, per capita GDP at constant price. Constant price කියලා දුන්නා නම් you can take it GDP at constant price divided by mid-year population. Right. So there's one more. What's it? Fixed price. Right. Per capita GNI. Per capita GNI. That's why there's a 3 box. There are 3 box. Per capita GNI at current price. So here GNI at current price divide by mid-year population. Right? 3 for 3 boxes. Right. What's the next one? In a given year, the gross domestic product at current price of country has increased by 14.1. We'll mention those points. I'll erase this because I know you can pause this and write down. So here, 12th question. In a given year, GDP at current price, that means market price, has increased by 14.1. Market price growth එක නේ තින්නේ 14.1 කියන්නේ equal 14.1%. And the second one, GDP constant price has only increased by 6%. GDP at constant price is only increased 6%. So they're asking, explain the reason for this situation. Situation is clear. What is it? Constant price is the real output change. Real output change. Here GDP market price, I'll write from here. It is the nominal output change. Change. Delta. So here we can write down a formula. What? Nominal output change. Nominal output change equal real output change plus what? Inflationary or general price level change. Yes, general price level change. So this can be identified as inflation. So here now we'll substitute the value. Nominal GDP is 14.1%, equal real GDP is 6% plus 14.1 plus the blank is the general price incremental, right? So it is how much? Making higher kadu karama, it should be 8.1. Here, this should be 8.1%. So that is the reason. There is inflation impact equal to the 8.1. We'll read it. I think answer is given. Just this is the explanation and the answer is given. GDP at current price is calculated by estimating the quantity of goods or services produced in a given period of time at a market price in a particular period, right? So what's it again? GDP at current price is calculated estimating quantity of goods and services produced in a given period of time at market price in a particular period. Current price output includes the material change. Current price means nominal price, right? Nominal output have both material change, that means real output change or quantity change and also price level change. Price change change. So here nominal output equal real output is the quantity change. Here is the price level change. Price change. What's next? Right. Fixed price GDP is calculated by removing the inflationary effects from GDP. fixed price එක කියන්නේ මේක. Right? So that means GDP at constant price is the fixed price or real output. It is only output change. Right? It is only output change. It is only output change. So therefore, a fixed price includes only the change in quantity of goods and services without any inflationary impact of GDP, right? Therefore, the increase in the percentage of market price GDP is more than increase in the percentage of constant price GDP. That means nominal output is more than, because nominal output more than real output, right? Nominal output, that means market price change is more than market price output. Market price output change is more than real output change. Hey, real output change එකේ තියෙන්නේ quantity change එක විතරයි. Output change එක විතරයි. But market price output change එකේ තියෙනවා quantity change එකයි general price level change එකයි දෙකම. Market price කියන්නේ nominal output එක. Real output කියන්නේ fixed constant price එක. මේ දෙක. Right? So therefore, in the increased percentage of market price, GDP is more than increased percentage of constant price, obviously. Prevailing, the general price level of the country has risen sharply during that year. හැබැයි ඇයි එතන general price එකේ incremental එකක් තිබ්බොත් තමයි nominal එක වැඩි වෙන්නේ real එකට වඩා. ඇයි general price එකේ impact එකක් නැත්තම් මේ දෙක සමානයි. හරිද? general price එක අපි හිතමු constant price එක constant price equal general price කියලා. that mean market price කියලා. එහෙනම් මේ දෙක සමානයි. ඒ වුණාට හදිස්සියවත් if there is inflationary impact that is in the nominal output since it is greater than real output, right? Final point, GDP growth at constant price is relatively lower than GDP calculated at current prices, right? Constant price is lower than current price. This is the current price. This is the constant price. Right? So obviously, nominal output එක ඇතුලේ constant price එකක් තියෙනවා, general price එකක් තියෙනවා. නමුත් in the constant price it's only output change. හරිද? ඒතර අන්තිම point එකකින් කියනවා GDP growth at constant price is relatively lower than GDP calculated at market price or current price, right? Because constant price has eliminated the inflationary effect of GDP current price. බලන්න අපි ඒ formula එකත් ලියමු. Constant price has eliminated. එතකොට ඔයාට මේ මම කලින් ලිව් එක ලියා ගන්න වෙනවා. පොඩ්ඩක් බැක් වෙලා මේ ලියා ගන්න එක කලින් ලියා ගන්න ඇති නේද? ඒක යටින් ලියා ගන්න කොහොමද ඒක හැදුනේ කියලා. දැන් අපි තව එකක් ලියමු. Constant price. Constant price growth equal nominal or current price. Current price growth minus price level change. Right? මේකම තමයි අපි ලියන්නේ කොහොමද? real output equal පොඩ පල්ලෙහාන් real output OUT PUT equal nominal output minus price level. or inflationary impact. Right. So if we substitute the values for this 14.1, no, not the 14, constant price mean 6% equal here. This is the 14.1 minus price level changes. We don't know, but we know. Right. 6% equal 14.1 minus 8.1%. Right. So please write down these both at the end. Right. දෙකම ලියාගන්න. Right. I think finally we have a calculation to work on. Yes. Right. We'll do. You can write this down. Right. What's the next one? The following information is provided to you regarding 2020 year in a hypothetical economy. Gross value added at basic price is given. Gross value added at basic price, right? Taxes charged on the product is given. Taxes charged on the product, not the production. Total subsidies provided on product is given. So we can take net tax based on that. It is 3,500, 4,500 minus 1,000. Net foreign primary income is given. Consumption of fixed capital is given. GDP, net foreign primary income, we need it to calculate national income. Consumption of fixed capital given, the difference of net and gross value, and also GDP at constant prices given, mid-year population given, GDP deflator given. Right, we'll see. First one, gross domestic product at market price. Gross domestic production එක අහනවා market price එකට. We'll see. Right. GDP at market price. What do we need here? GDP at market. Without a good try market price. So here they have given GDP at basic price given. Gross value added at basic price was given. Equal 48,500 plus net tax on products. Basic price එක market price එකට හරවන්න පුළුවන් අපිට ටක් ගාලා මොකක් කරන්න ඕනේද? net tax on product. net tax එක ගන්න පුළුවන් අපිට දීලා තියෙනවා taxes charge on product 4,500 minus subsidies on product equal 1,000. So here 3,500. So this is it. GDP at market price. Net tax on product නේ 51යි 52යි නේ. Right. 52,000. Right. ලියා ගන්න එක. Right, what's next? They're asking gross national income. Gross national income. So here, gross national income calculated by what? I think throughout this we can calculate. Ne? මම මේකෙන් මේ අන්නම් ඕගොල්ලෝ වෙන වෙනම ලියා ගන්න ඕන. Gross national income or net national income. Gross national income. Right. So here, yes, net national income can be calculated. Just you have to add what? Net primary income. Net primary income. Adding net primary income to the GDP at market price. Net primary income is how much? Net primary income is, net foreign primary income 1,500. Right? So GNI is at market price 53,500. And the next, this is the third one. It would make a first one. A, and this is B, and C can be calculated. C is what? Oh wait, net primary income is not positive, ne? Yes, it is negative. So sorry, I didn't see the minus value. So here now 50,500. Right here, net primary income need to add, but the problem is it is a negative value. So since we have to deduct that, so it is the GNI. And next one, NNI. See, net national income can be calculated by just removing the fixed capital consumption of fixed capital. CFC, that's the consumption of fixed capital, is how much? 800. You have to deduct that, then you can calculate NNI, net national income, 49,700. 49,700 is the value. Write down it. Right, next one. GDP at constant price. GDP at constant price, they are asking me. Oh, that's the fixed price. Constant price or fixed price. Net national income calculated. GDP at constant price. GDP at constant or fixed price. Equal. අපි දැන් කතා කරන්නේ ඒක. GDP at market price divide by GDP deflator or implicit price index into 100. So what is the GDP at market price? We calculated that. 52,000 divided by GDP deflator was given 2010 in 100. It is the base year, right? ඒක සාමාන්‍යයෙන් දෙන්නේ එහෙම ළමයි. Within bracket දාලා 100යි කියලා දෙන්නේ. It is the base year price. So base year is 2010 and base year value is 100 and this year current value is 125. It is the ඒක තමයි සමාන ලකුණෙන් එහා පැත්ත දෙන්නේ, right? 125. So we have to divide by 125 and multiply by 100, right? So the value would be how much? 52,125 බෙදලා 100න් වැඩි කරාම it is equal 41,800. Is it rupees or million? It was not given. Million වෙන්නේ නැති, but it was not given. Since anyway rupees million and මේවත් rupees million. මේ මෙතන එකපාර value R is million, right? ඒක ලියා ගන්න. GDP මොකක්ද අපි කළේ? constant price එක හොයන්න GDP market price divided by deflator into 100. අර කලින් මම කිව්ව formula එක. Right, next one, economic growth rate. How to calculate economic growth rate? By constant price GDP minus last year constant price GDP, economic growth equal year 1 constant price GDP minus year 0 constant price GDP bedima year 0 constant price GDP. Right here මම එක මේ හැවියට substitute කරන්න. year 1 constant price GDP. ඒ කියන්නේ මේ current year එකේ constant price GDP It was, yes, we calculated it 41,800. And is there any information regarding last year? Constant price, yes. 2019 it was given 40,000. Here we need to multiply by 100 as well, 100%. Divide by 40,000. That's the last year constant price GDP. This would be same. Into 100%. It is equal how much? 1,800 divided by 40,000 into 100. How much? 1,800 minus 40. So yes, 1,800 divided by 40,000 into 100. That means 180,000. Divided by 40,000. It is equal 4%. Right? It is 4%. So economic growth rate is 4%. How to calculate it? Just